March Madness is here. Markets and college hoops. Did the Fed choke? And are we making too big of a deal of the coronavirus? What's up, everybody? Welcome aboard. It is Sunday morning. It is Bubba's Bottom Line, March the 8th. Wow, another month is flying by, and what a month it started out to be. It's been wild with 1,000-point days up, 1,000-point days down, and yet here we are in the middle of nowhere, in the very early stages of a recession, even with that huge jobs number on Friday. Again, first thing about government reports, they mean nothing. It shows that the government might know how to account. Okay, we're not sure, but that may show they know how to count. But whatever numbers they ever come out with that are government numbers, okay, are always suspect in either side, and there's always some type of adjustment later. So again, the 270 jobs, I mean, we know the economy is strong. We know there's a demand for jobs. We know people are working. So that's good. Now, again, I don't know the numbers, but obviously we see people are working, and everywhere you go, there's a help wanted sign. So we know there's plenty of jobs available. So that goes without saying. Real great jobs versus jobs, we'll see. And of course, obviously, many of the people that need to make more money are stuck taking lower paying jobs because, of course, they're not qualified for the higher paying jobs. So anyways, but all that being said, the bottom line is that we are in the early stage of recession. We've said it. We were first to say it months ago, and that has not changed. Okay. We are definitely seeing slowing in the economy. We're seeing slowing in manufacturing. We're seeing slowing in shipping. Before the coronavirus, before all this got here, we had slowing. Okay, so again, we can blame it on the corona, which, again, coronavirus is a very bad thing. I don't know. I'm not a doctor. I'm not a health expert. I know that this year there's been more deaths and cases of the flu than there has been coronavirus. So again, I don't know. I am not changing most of what I do personally because of the virus. I mean, certainly I wouldn't walk into an area where I was concerned, but overall, I am not really thinking about it on a daily basis. Of course, it's hard not to with the media pounding it every day and making this the biggest crisis ever. But again, is it? I don't know. But certainly, between every event that's been canceled, I was supposed to travel and speak in New York, canceled. Another trip coming up probably will be canceled. Now, are we overreacting? I have no idea. Okay. But for my money, I would say yes. For my money, I would say, let's see if we get even as many cases as the flu. Okay. Let's see the actual mortality rate from this before spreading the panic throughout the country and the world. But again, I don't know. I'm not an expert. So I don't want to say that I know and that it's this. I think that so far there's been a pretty solid overreaction to everything. And of course, but it's the perfect story for the markets to sell off. And it's great for the pundits to be able to chirp and chip about, oh, there's all these coronavirus. It's got nothing to do with the economy. The economy's great. But again, to me, this is a mask, which is usually what happens. Again, we've talked about this on my shows, whether it be radio, whether it be here or anywhere. We've talked about the issue of the way things get reported and how we pretend to react to one thing when we're really reacting to another. In the meanwhile, okay, markets are under heavy pressure. But at the end of the day, through all of it, okay, what are they? Well, they were higher last week net after all that turbulence. All right, but we're going into a bear market. Okay. Now, it doesn't have to be tomorrow. It may not be this week. It may not be this month. We may get a nice big rally from here. Who knows? Okay. But overall, there's a lot of weakness throughout the system. And there's a lot of reason to believe that markets are headed lower. If you're watching the 10-year at 0.70 right now and looks to be going a lot lower. And of course, our favorite group the Federal Reserve, God help me, is choking. Okay. Now, last week I said to you, I would not be surprised if we got a rate cut before the day was over. It was Sunday, before the markets reopened. Well, they decided to wait till Tuesday. And of course, the markets got an immediate boost of about 500 before falling apart. Okay. And getting collapsed. And of course, the next day they were up 12, I think the biggest number day ever, which again, remember the percentages. Let's not get carried away with the numbers. Let's remember percentage moves. We've had moves like this many times in history in percentage-wise. But of course, the only way you can sensationalize these numbers is to make them how big they are. Well, is 1,200 points on a 27,000 point index bigger than 1,000 points on a 1,500? Let me think about that. Okay, you get my point. Okay, it's a crock. Okay, we had 1,000 point swings in 08 when the index was at 14,000, at 13,000. So again, let's not overblow the size of these moves. Look at them in percentage basis. That's all we care about. You get a 3% move in a day. Okay, it happens. No big deal. I mean, you get a 3% move in a stock. Do you get panic and jump out of a building? So let's stop over I can't even get the words out of my mouth. I'm so mad about it. But let's stop over hyping all these numbers. They're not that big. Now, again, the fear being driven by Corona. I mean, I was reading something over the weekend. All the hospital beds will be full by May. I mean, really? Are we really going down this road? Okay, in 2020, are we going down the road that they won't be able to? If this is more of a problem than anybody thinks, we won't be able to get to it and solve it with all the technology and brilliance in the world. Okay, you don't think? I mean, again, that's why personally, I think it's overdone. Okay, again, I don't know, but we are in the early stages of the recession, and of course, Goldman Sachs came out and said that they expect 2450 in the S&P as a low this year. Well, I would say they're going to be wrong. I think we're going lower. Okay, but again, besides that, normally what that would mean to me that Goldman Sachs is trying to look to be a little bit of a buyer here. Okay, again, remember when the big banks make big calls, typically they want to get to the other side of that market. Okay, typically. Again, that's just the way markets go. You talk about the spoofing, you talk about directing, the genuinely people that have a solid opinion and make a big call is usually the opposite of what they really like to do. Okay, many people now are waiting for the big flush. Okay, the big capitulation bottom. Okay, well, I don't think it's coming so fast. So we'll see. We'll talk more about that when we get to the actual markets. But I think that the historic crash in bonds is interesting. But again, let's analyze the bond market. Again, it's really, unfortunately, it's not an animal to itself. Okay, it is globally related. So we look at what are the Treasury bonds. Okay, Treasury bonds are a way for the United States government to borrow money. Okay, so we're paying what we actually are paying for it, but the government, okay, funded by us, but we're paying for the loan, the money that they're borrowing, that they continue to piss away, that they continue to throw in a garbage can, and all ridiculous, whatever they do with it. But again, that's the system. That's what we have. So they're borrowing from investors or from other countries, and they're taking this money in. Anybody who buys a United States Treasury bond or note has the full faith and credit of the United States government behind it. So according to President Trump, which he's 100% correct, okay, we are overpaying for interest because, again, if you compare to the other major countries around the world, where are you going to get, money? So we could, in theory, go down to 0.5% or less and still attract the money that we need to borrow. Because again, would you rather give it to the United States at 0.5% or at 1/4? versus giving it to Germany at -3/4 or anybody else that's at negative rates. Well, of course, you're still going to take the positive yield. So by the natural theory, President Trump is correct. However, by free market theory, the Fed has no damn business in this market and should get the hell out. Okay, but that won't happen now. So they will continue their destruction of the dollar, of the economy, of our assets, with the constant getting involved in the middle of markets when we know that the banks, as I've said many times, and it's starting to show up, are once again over leveraged, and they're not going to loan to the average guy. You hear all this talk about mortgages and how many people are going to get remortgages. They're not giving money away to low credit scores. Okay, nobody's getting those great rates except the uber wealthy. And of course, the uber wealthy knows how to do it. They'll just keep investing it because they know that they're borrowing at 2 or 3. They can invest it and get 8 to 10. It's a pretty good arbitrage. Okay. And if you take a look, you can see what's going on between the dollar euro carry trade. I mean, the dollar is collapsing all of a sudden, and the euro currency is exploding. So again, there are so many things going on that are wrong, that are created by our friends at the Fed, okay, that take the market and throw it out of whack. Okay. But again, that is exactly what's going on. And of course, I think one thing I did notice this week is Turkey. Now, again, it always starts with somebody small, but Turkey is now relaxing the values of loans that banks can lend out. Okay, so they're relaxing their credit restrictions, which means that their banks can give up higher loans that have more risk. Okay. And I think that's an issue. And I think obviously, typically it starts small somewhere, but I think that our banks have been doing it all along anyways. And again, if they could audit them, we can't, but if we could do a real audit, if they get a real auditor in there, I would think you might see some problems. And I think that's another issue for another day. But again, these are things that continue to mount up. And as I said, I know some information. And this isn't inside information, just somebody I know is one of the mass lenders to one of the biggest franchisers, and he's telling me that they can sell every loan they get and pick up 3 to 4 basis points without taking any risk. What does that tell you? It tells me we're cruising for another beatdown and another bruising. Okay, so I think that things look very shaky. Tonight's opening ought to be very interesting. But remember, you will get these rip-your-face-off rallies no matter what's going on. Okay? So there's a lot of issues out there. There's a lot of problems, and which are creating a lot of fear with the VIX exploding. But we'll talk more about markets and more about that when we come back from the break with Bubba's Bottom Line, Todd Bubba Horowitz, Sunday, March the 8th. We'll be right back with more. What's up, everybody? Well, we did a great webinar on our futures, and once again, many of our futures portfolios, new all-time equity highs. Through all the volatility of last week, here we are sitting at the top of new highs again in many of our portfolios. You want to check out that webinar? Shoot me an email at bubba@bubbatrading.com. I'll send it to you right away. It's free. Check it out. Okay. In the meantime, don't forget our trading partners who take care of our things for us. We've got Trade Your Brokerage at 0 commissions. Okay, $10 flat a month. None of that phony free with 65 cents a contract. $10 flat, no contract charge. Okay, and of course, if you want to get that deal, you can just send me an email, bob@bubbatrading.com. I'll send you their link. And of course, our futures trading partner is CTG, who's doing the letter of direction trading and taking care of business. And of course, they've got a brand new product there as well that could be extremely exciting for those who like to invest. So check them out, and I'll send you their information if you'd like. And of course, don't forget about our high school program at Patreon, patreon.com/Bubba Trading, patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me, Todd Bubba Horowitz. Welcome back. It is Bubba's Bottom Line. It is Sunday, March the 8th. It is early in the morning. And of course, we've got, the market's open tonight. It's 6 Eastern time, and it should be very, very interesting. I'm not really sure what to expect. Of course, once again, what did we see on Friday? Is the pundits and the jackasses out there kept saying, oh, who wants to go home long on the weekend? You got to be short. You got to sell. You got to sell. You got to sell. So for the second consecutive Friday, within the last half hour of the day, you saw a tremendous rally off the lows. Last Friday, it actually closed higher on the day, but this Friday, still a 700-point rally in the last 20 minutes, out of nowhere, that nobody wants to go home long the weekend. And again, I'm not saying people are getting long, but certainly the shorts didn't want to be in either. I mean, this is a very tenuous time in general, okay? But the markets were actually higher on the week last week. It was volatile. It was crazy. The VIX got up to 52, I think, at one point last week. But in the meantime, the markets are in trouble, okay? Now, full disclosure, as I always give you, we are long, okay? Three of them. We're long three of the indexes and short one right now. Now, again, a big hit will reverse us out, but we were long, we got short, we got trapped, and of course that's going to happen when we don't. Again, I don't ever worry about one product. We still made new equity highs throughout all the volatility. We still made new equity highs, so I can't worry about that. But again, you could look for, if I were to give you if I'd go to the crystal ball and say what could happen, my guess is they're going to trash them tonight. This is my guess. Again, but my guess is they trash them tonight. They take out the lows, okay? And then we see in a couple of days, or even tomorrow, or during the day tomorrow, or Tuesday, or when, we see a rip your face off rally. Again, that's just my take from here, from the cheap seats without seeing anything, and I'm just guessing. So again, don't take that as the gospel. That is just me taking a shot at what I think could happen. Okay. In the meantime, markets are ugly. Okay. The whole tape is ugly. Nothing is inspiring right now. Okay. Now, oil is under major collapse. As we said when it was 60, 55, we said high 40s. Everybody laughed. I said that on Yahoo. We said when it violated the 40s, the 50s, and came back above, we said 45 would be the next target. Everybody laughed. We said once it touched 45, went back up above again, we said 40 is the next target. Well, we're close at 41.05. Okay. I'm thinking now, okay, the mid-30s are in play, if not 30. I'm thinking actually possibly the 2016 lows, okay, which are under 30. Okay, now again, I'm not predicting that. We're short, but again, if it reverses, I'll change right along. As much as I hate it, but I would change it right along. But don't be surprised, okay? And I've been on this from the beginning. We were long it to the top, and we got out on the way back down, and we've been short ever since, and obviously we'll stay there. Now, the gold market, we got flipped around, but we were able to get back to the right side last week. We were long gold. We got short last Sunday night. A little troubling. Got reversed out right away, which is extremely unusual as our algorithm, but our algorithm also adjusts to the high volatility. It takes a couple of days, but it also adjusts. We got put back in gold, okay, and so we're long gold. It looks like gold has got, the 1700, 1720 in its eyeball right now, and it should get there, okay? And notice, though, how even throughout it all, okay, silver and platinum remained relatively weak throughout this period. So we'll see, again, we're short silver and long gold. That's actually our position, okay? Copper has been weak suddenly, and again, and should be based on, global growth and what's going on. So again, copper remains weak. Now, the interesting story, wow, the treasury bonds and the notes. Now, I've only seen one move like we saw on Friday in my 40 years on the floor, okay, 40 years of trading. And the treasury bonds, the 30-year bonds that we didn't need anymore, they actually eliminated for a while because we had so much money, okay? But of course, we saw where that all went. But it was up 6 points at one time. I think it closed up over 5 full points. So if you look at that at real money, that's $5,000 if you had one contract on. 5,000 to 6,000 for one contract. Okay. Now, 6 points is big, but don't forget the big number is 180. Okay. So but I did see in 87 on the Tuesday, the 20th, that the bonds were up 6 points when the bonds were only 60. Because remember, treasuries, okay, have been in a rally for 40 years. Okay. Since 1980, the rates have come down consistently. Okay. If you look at a chart of the futures, you will see the chart is going up, Okay. And if you look at a chart of the rates, you can see them going down. So again, but this is an awfully big move. And then notes off. I mean, again, point 70 is where they closed on Friday as a yield. You know, and the 3 month is getting ripped. I mean, again, we talked about the short term yield curve and how it inverted weeks ago. So again, none of this is a real surprise, but it obviously is concerning especially to the markets now. So again, this was the Fed choking that did the reverso of what they were trying to do. Okay, so there's probably going to be some QE. There's going to be something else coming soon, and I'm sure there'll be another rate cut on the 18th. Okay, which is I guess a week from Wednesday. Okay, so again, I'm sure that's coming down the pike. Now, so bonds are exploding. We are long though, so that's a good thing. Okay, the meats, hogs look to have bottomed. Okay, and are trying to work back up. Cattle itself is extremely weak. Now, this is going to be very interesting tonight, tomorrow. Okay, because I think if the markets are under heavy pressure, cattle will come under pressure as well. They sometimes trade in a similar direction, especially if there's a big move. And my real concern in the cattle markets, we're short, so it's okay. It's okay for me, but obviously not good for producers and farmers. But I think my real case here is I'm really afraid that there will be some forced liquidation from banks. You know, obviously farmers and producers borrow a lot of money to put their crops in and to take care of, the cattle and everything else. And of course, the banks are getting nervous when they're using that as collateral, and it's falling apart quickly. And typically, under a panic is typically when the market banks step in and force liquidation, which means that they'll help put a bottom in, but it won't feel good while it's happening. Okay, obviously at these low levels now, I'd love to be long, but again, I'm going to follow the algorithm and stay short. But I have my finger on it and ready to reverse when it comes time. Hogs, on the other hand, have finally looked much better and looks like they have made an actual bottom and are going to make a little bit of run up. So hogs look pretty good. Now, the grain markets are another story. Corn, we are now long corn, okay, and it looked pretty good until Friday. It fell apart. But again, we're still long. But again, I'm very comfortable right now with thinking that the grains have started to bottom. I think that corn, we've obviously turned long there. Soybeans are close. Now, they were under a little bit of pressure on Friday. And wheat looks very bad right now. Now, again, that can change. But if you watch 520 in May wheat, that would be a key to watch. Below it, there's no reason to buy it. Now, we're short wheat. We're short corn. Short beans, long corn. And we'll see where we go from here. But I do think you've got the WASDE report coming out, I think, Tuesday or Wednesday. Now, me personally, I will give you what I suspect the report to be the day of before it comes out. Okay, but again, that could have some effect either going into or after. Again, I don't care. I guarantee you that I'll be close to what the report's going to say, whether it's going to be bullish or bearish, based on the price and tape action before it happens. So that's something that we're going to watch, and we'll obviously put you in on our text and in the daily update. Then we've got, of course, the VIX, which is exploding. Now, you options traders, you've got to be very careful here. Okay, options are very expensive right now. Now, remember, if you followed me for any length of time, or if you read any of my books, you know that I say that options are always fairly priced unless they're expensive. They're never cheap. Okay, because remember, the other side's a market maker, so they're fairly priced. Well, now they're not so fairly priced. They're right now they're trading at 4 to 5x what they normally trade at. Okay, the at-the-money straddle in the spiders for tomorrow is trading at $10 or $9. Okay, that $9 move tomorrow. So again, volatility is way out of hand here. So you just have to know how to position yourself properly, and that would be using a strategy versus just buying a straight call and a straight put. That's why futures are the cleanest market, because at the end of the day, there's the only risk you have is your own risk, right? There's no premium risk. It's the straight future. It's a clean, clear price discovery model. Okay, so again, that's why we prefer futures for active trading. Okay, and for all different types of trading, which is why we run both equity and futures portfolios, but the futures are much cleaner and simpler. Okay, so again, we'll see what happens. Don't anticipate what's going to happen next. Let the markets dictate what's going to happen to you. Okay, I have no idea. I mean, again, we're long, so what am I going to say? But I'm telling you, I think you might see some heavy selling into tonight. Of course, maybe a little spike higher. Again, if I knew, I would tell you. I don't know the answer to that. I mean, again, right now, I can only say this, that the big movement is here to stay for a while. So don't be surprised to see another week of 1,000-point up and down days. Okay, and we'll get a better feel. The markets are in wide sweeping congestion. They're going to break one way or the other. They'll break back to the upside and make highs. They're going to break to the downside and go into a bear market. I think they're going into a bear market. But again, it doesn't mean they won't pop up first. So let's see how they trade. Don't try to anticipate. Don't guess. All right? Let the market prove it to you. Let the charts speak to you and show you the path. And read the text, because I give you a good idea during those texts, and see the Bubba's update. In the meantime, this is Bubba's Bottom Line. Todd, Bubba Horowitz. We're going to step out of break and come back with my commentary. We'll be right back after the break with more Bubba's Bottom Line on Sunday, March the 8th. Okay, kids. Well, again, as I've talked to you about, we've got some great webinars in stock. And, of course, we just did our futures micro mini portfolios, new highs in 3 out of the 5. Again, what can I say? Every week, we make highs, and we were not affected at all by the volatility. So, you want to check it out? It's free. All you can do is email me at bubba@bubbatrade.com. And, of course, we've got 2 brokerage partners for you. CTG, who does the letter direction trading for our futures programs, that if you don't want to do it yourself, you can have them do it for you. They take care of everything, and they do it for a lot of people. IRAs, the whole deal. Okay. Plus, they've got a new product coming, so you may want to check that out. In the meantime, you can email me to get their information. And, of course, don't forget about our friends at Tradier, who, get real free commissions, not that bull of 65 cents a contract, free, $10 a month flat. Okay. You can email me for that link, bubba@bubbatrading.com. And, of course, don't forget our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Let's get back to Bubba's Bottom Line with my commentary. Welcome back. It is Bubba's Bottom Line. Todd, Bubba Horowitz, and of course, every week I give you something I'm thinking about and some opinion. And of course, I've about had it with the election, with this ridiculous crap, and between the socialism and everything else that's going on. And of course, nobody wants to be a socialist. Bernie Sanders will never get the nomination. I don't care. The DNC will never allow it to happen. Okay, but what really bothers me is the talk about those who have money and the billionaires in the world. Look, if you earned your money and you built something and made $1 billion, would you give it back? Okay. All I know is the way that I see this whole situation is that they're going to force people to stop working. They're going to take away the incentive to create. Okay. They're going to take away the next Steve Jobs, Bill Gates, whatever, because they're going to take away the wanting to be innovative, because, again, if you're capped at how much you can earn, why are you going to be extra creative? It doesn't make sense to work that hard if you're going to have a cap on your earnings. Okay, if you're going to get so overly taxed. Now, it's interesting that the biggest supporters of socialists are the ones that have already made their money. The wealthy from Hollywood, for example. Okay, the wealthy from Hollywood already have their money spent. Millions and millions of dollars finding lawyers to hide their money, are now outright socialists and can't stand the free market society. Isn't that amazing? Well, I guess because they're at the 1% versus the rest of us. So what do they care? They're set no matter what happens. Again, you have to look at who is actually preaching it. So the 2 biggest advocates of socialism are the uber wealthy from the left side in Hollywood, and kids that now every kid is born in a socialist or an idealistic environment. Okay. So of course they're going to be, but then when they start making money, they realize how much taxes they're giving away for nothing. They usually change their mind and aren't quite so freely giving it away. But again, there should be no shame in being rich. I don't know why you would want to be. I think that it's great that people have that in America, the United States of America, you have the opportunity to make as much as you can. Especially if you put together something like an Apple computer, like a Dell computer, like a Facebook, okay, like an Amazon. You want to stop all that stuff and bring back, and live in Venezuela or live in some communist regime, some Marxist regime. God bless you, but it ain't for me. Have a great weekend, everybody. As always, I appreciate your time, and March Madness is here, so we have a lot of fun with college basketball and also the markets. In the meantime, have a great weekend, everybody. We'll see you tomorrow with Bubba's Daily Update. So long for today, Sunday, March the 8th. Bubba's Bottom Line. Have a great weekend, everybody. We'll see you later.